won't you tell me your name? Lou, I love you, won't you tell me your name? So this isn't working. Nobody's here? Why is this not working? It's weird. It says I'm streaming and it says I'm pulling good internet and excellent connection. And it doesn't say anybody's here. And of course, no one said good morning, which they usually do. So what the heck would be wrong? Well, if the off chance that you can actually hear me, would you please type in the chat? Nothing, nobody. All right, well, before I give up, let's be thorough and smart about this. Let's see if I can restore the chat. There's nobody in the chat, but I believe in our community. I know you're there. I think YouTube's making the mistake. Refreshing the chat. Now I'm getting spinning on the video. Let's just see. Let's just see. I'm patient. I'm positive. And voila. Okay. Look, see? You are here. YouTube was trying to tell me you were not here. I believe in you. I know you're here. All right, cool. I'm still getting spinning down here. But yeah, so now I can see the chat. The chat was totally blank. Cool. So now I can see you guys. Good morning. How you doing? It's unusually low. It's probably better now that I've moved the mic. Yep. Cool. Thank you for being here this morning. Today is the first day of the next 5 years of my life. And I graduated! Woohoo! Check that out, huh? I guess I can't record. 11-year-old bottle of Dom Perignon. Oh, it was good. It was good. Thank you to the support of my wife and my children and your constant positive energy in our community. Thank you very much. And wait until you see the next 5 years. Oh my God. It's like another level. So thank you very much. Without further ado, let's get on with it. Screw. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yes, I can tell you that on one of my final examinations, I got an A-, but the second one I got a B-. Now, in other areas of that class, I got perfect high marks, and I thought they were a gimme. But in the student chat on WhatsApp, people are freaking out. They're like, how could he give me 2 out of 10? I'm like, 10 out of 10, baby. So I did something right. And, you know, Harvard has taught me that I have a privilege being a supermodel. People just are just overwhelmed with my beauty. So that must be it. I'm sorry. I was born this way. I'm not bad. I'm just born this way. So anyways, B- is, yeah. But so I don't know what I got for the grade, though. The first grade in my real estate investing class, I got a solid A. There is no A+ at Harvard. but I got A's in everything, and then I got an A minus in the final. So drop the mic, walk off stage. So here's the thing. Here's the thing. Here's because I got this B minus and a couple of other funny things that happened on my journey. I don't think I'm going to graduate with honors. I think I'm going to miss it by 0.01. And the interesting thing about that is a year and a half ago, I got in an argument with my professor over whether a business had morality. Okay? Had nothing to do with the class. I'm an A student, right? He's sitting there. I told my friends, I'm like, I look up in the middle of the final exam and this professor's staring at me, even though we had settled it. And I explained my reasoning. He's like, oh, okay, well, I guess. And he gave me a good grade on that paper. But when it came to the final, I told all my friends, I'm like, I look up and he's staring at me, and not just staring at me, seething and searing. Like he hated my guts. And he graded me so poorly on the final exam that I got a B plus in the class. I went from an A student to a B plus, which means he gave me like a C minus in the final. I'm like, how is that even possible? Boom, I won't graduate with honors now. Partially because of that. Isn't that interesting? Oh, what? Stand up for yourself though, bro. I'd do it again, and that's the problem. I'd do it again. So, it's over. It's over. Huh? It's over. So the future is what I'm focused on now. So, anyways. Yeah, okay. I don't know why the mic is so sensitive today. I don't know. Maybe if I twist this button, I don't know. Does that move? I don't know. No, that's full. Anyways, so I'll keep it nice and close. So anyways, done. So, looking at this last night at the Asia Open, I looked at it and I passed. I saw some trades, like I saw this on the Kiwi, I saw this on the CAD. I almost pulled on the CAD, but everything was below the 21, and I felt like I was betting. And what week is it? It's like the second week of August. This is a week that I am not aggressive. It's not I'm not afraid, but I'm not as interested. Right? Oh, sorry. This one? There you go. Let's do this again. See? By the way, I've been sleeping. I put that Dom Perignon off a whole day because I was just too tired to even drink it. So anyways, I'm still a little slow. So anyways, I saw this looking at the monthly, and I saw this looking at the monthly last night at the Asia Open, and I'm like, right? Okay. And yeah, and so anyways, I didn't trade. Second week of August, I don't have to trade. It's kind of the way I feel. I feel like I'm kind of waiting. And the other thought was being overly aggressive. I don't want to bet that the trend is going to go up, especially with China geopolitical tensions. That's something that can bring us downtown. So, so even though I was looking at sort of in here, I could go long after the kick of that. We were still below the 21 and all of that. And I don't know, I wanted another level, right? So I think I'm going to try to play these maybe more like a 1, 2, 3. Cristal? You know, I don't know. Dom Perignon's fine. I know if you're a champagne snob, you would like, I would never drink Dom Perignon. But check this out, though. When you buy champagne, you might get a good bottle that's 5 years old, right? This is, 11-year-old Dom Perignon, 2009 Dom. Yeah, it's good, man. Good enough. Cristal? Yeah, I guess so. Cool. So, yeah, so I don't know. I don't want to be first one in. I'm not that convinced. I want to be convinced, but with geopolitical tensions and stuff, there are things I think before I go on all the yens. I'll wait. I'll just wait. I'll get it later. Sev's like, oh no, Dom Perignon fine. Like we're snobs. When snobs. Right, Kev Dog is like, I see what you're trying to do, but it's not quite bullish yet. Yeah, it can be. Um, I mean, I'm not overly anti-bullishness. I just felt last night was early, or maybe I'm a little soft or something. I'm tired, my back still hurts. What a crybaby. But, I look at it like the 2nd of August. There's a giant chance that really nothing, right? Michael's like, vintage champagne is a step above the rest. If you know, you know. Yeah, right? So it was good. Okay. So I'm going to play the dollar. I think it's going to be cleaner. And I tend to use like Aussie dollar as a barometer, the canary in the coal mine. And going back to March, there's not been pretty much bullishness, right? So based on global macro and focusing on a barometer, you have to pick one, right? This is still technically bullish, and I should remain bullish. Oh, that's weird, Johnny. I'll take a look. I've been off the grid for about a week and a half. So I'm going to slowly go through all the customer service stuff. I'll check it out. Also, with some of the sites, I'm going to reprogram the process to try to make it even easier of a process. Hey, Johnny, right on. Today is the first day of the next 5 years of my life. Oh my God. I'm so happy, guys. I've been telling you, oh, well, soon as Harvard's over, soon as Harvard's over, soon as Harvard's over. Man, oh man, oh man. Oh man. It's going to be good. Why exactly Aussie USD? Okay, let's talk about this. Aussie gives me China. Aussie gives me commodities. Therefore, being an exporting nation, if there's good global macroeconomics, Australia will go up. Also, the Reserve Bank of Australia also said that they're not going to cut anymore. And from that day, which was back, I don't know, back in April or March or something, I told you just straight up Aussie dollar long. Okay? So that's part of my bias. Also, with the same forces in play, if there's good trade, if there's global macroeconomic expansion, if there's risk on, US dollar will be weak. Because it's also an exporting nation. Even though it imports, it also exports, and it exports its dollars, which is a really interesting thing. So if they come together because of the same reasons, this will go up. So I can tell you for the next 5 years, unless we get in another trade war with China or COVID-20 or COVID-21 hits, right? In a normal behaving market of global macro forces, I will be long all day, most days, Aussie dollar. Mikey! Michael! My Joe! Mickey Jobs. Good to have you here. Okay? So that's it. So now here's the interesting thing, right? Like new trader says, bearish bias, and all right, oh, that's fine. If when I kind of whittle things down, I'm setting a strategy, okay? And then what you do tactically ideally aligns with this, or if you see the decoupling on the short term of the strategy, you could be a bear inside the candle, like inside the daily candle, like, or for a week you could be a bear, but even though you're a bull for the rest of the year, you can do stuff like that. Most people are not that good. They screw it all up and then they start chasing their tails and whatever. They lose self-respect and they collapse. So I say leave that for year 10. Leave it for year 10 until you have so much discipline that you can do it. Most people can't do it, okay? Right? I was at the country club over the weekend and we're out swimming in the pool and, and all that kind of stuff. And there's this big fat hairy guy laying by the pool reading a golf magazine. I'm like, it's not going to help. It's not enough. It's not enough. So when you have the skills, I'm like, I don't know, maybe he's a good golfer. I don't know. But yeah, you should focus on your training and not trading. You shouldn't over trade. That's not what's going to make you lots of money, being long and short. You're the world's greatest trader. You can pick the tops and bottoms like other people pick their nose and their... And no, that's not the skill. You know what the skill is? And here's the funniest thing. The skill is to know to start buying in here. Okay? And that's it. You could have just bought it and walked away and you're done. Patience and discipline. Or added another, added another, added another, added another, added another. Yeah, you had to buy every time it retraced to the 21. Okay? You don't have to be a rocket surgeon. That's the thing I keep telling you about. Up, 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 down, down, buy. 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 Up, 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 down, down, buy. Up, 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 down, 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 buy. Right? And we're just riding the 21, bro. I want you to make life easier, not more complicated. You don't have to be long and short, short and long. But you could be, of course. I haven't checked. I still think that's so funny. Okay. So, I'm going back to what I was saying. We're still above the 21. I'm bullish and aggressive. And what does that mean? Global macro risk on. Now, I know we're slapping each other in the face with China right now, right? Take off our white glove and slap, and they take off their white glove and slap. So I got some risk here I need to worry about. But I'm not going to overly worry about it yet because I'm simplifying the equation. Do I buy low or do I not buy low? There's not even a thought process of selling yet. You understand? Now, if you get something like this, that could change everything. And then we start looking at this, and what do we call this? An old man easing into a hot bath. And I'm a hairbat. It's an omehbe. Omehbe. It's true, though. That's in my book. I didn't make it an acronym because it doesn't make any sense. But it's an old man, Baba. It's an old man. Okay? And that, by the way, sets up a double top of a double top, but it also sets this up. So over the course between now and the end of the year, you get a double top of a double top, a head and shoulders of a head and shoulders, and all that kind of stuff. Kev says, fundamental question, does the RBA like it when their currency is strong? Not really, because they're an exporter. Be born, yeah. Make sure Daniel marks it in the timestamp. Yeah, old man easing into a hot bath. It's in the book. So yeah, Kev, they don't really like it, but they have bigger concerns right now. So like their bigger concern is if the United States and China get into a trade war, who's going to buy their iron ore and coal? So trade wars are bad. Okay. Benjamin says, hey, congrats on completing your final exam. 2 final exams, back to back. One was really difficult. The other one, I got an A-, so it wasn't a challenge. I missed a couple, but whatever, right? The other one was interesting, and some of you guys might enjoy this logic, but one question would be like, here is the cap table, the capitalization table for a startup. And looking at the cap table, you can see that they had an angel investor come in and loan them $500,000 in a convertible note with a 30% discount on Series A. Then they got a Series A, and the investor came in, and they put in $2 million, and they got this number of shares. Answer these questions. What was the pre-money value? What was the post-money value? What was the dilution of the founders? And what was the price per share? And you're like, not a problem. Snap, got that, right? So you answer all those. Now, bear in mind, if you make one calculation mistake under time duress, all the other numbers won't work, right? Then they said there was a Series B, and a new investor came in, and they put in $5 million. What is the dilution to the founders? What is the price per share? What was the pre-money value? What was the post-money value? And how many shares does the Series B investor have? Okay, so now there's an angel round, a first round, a second round. Everything's golden. Everyone's happy. Everyone believes in the company. Then a Series 3 comes out. A Series C, a C round happens. But there's a problem. The founders are not hitting their milestone. And because of that, the valuation is down. It's a down round. The price didn't go up. So the Series C guy comes in and buys, 6 million shares for $6 million for a $1 price per share. However, the share was higher in the earlier rounds. Now it gets interesting. Using a full ratchet in the term sheet, what number of shares did the B person get in addition? What did the B person get? What did the A person get? What is the dilution to the founders, right? And then answer the same question, but if they used a weighted average ratchet protection, a dilution, anti-dilution protection instead of a full ratchet that used a weighted average. Do all the calculations again. And this is one question. You're like, oh my God, it's boom, boom, boom. And if you get it wrong or if you run out of time, go, go, go. And all you have is an Excel spreadsheet. Holy schnicker. So to get a B-, it could have been a hell of a lot worse, I think. Don't you just miss school? But anyway, so even though I've been a venture capitalist, now I'm educated. I'm an educated venture capitalist. So anyways, so some of that I knew. Most of that I knew, but the issue is understanding the logic, or cranking out the numbers is much different. Usually your lawyer just runs your cap table for you. But anyways, there you go. How do you think the aluminum tariffs on Canada will affect, aluminum? I don't think Canada, as a percentage of GDP, exports that much aluminum where it's going to really affect anything. Okay? So remember, tariffs are generally political tools. I think India and China produce enough aluminum to support the world. So anyways, let's go through this. So with my logic on global macroeconomics and my fingers and toes crossed that we don't create undue or unnecessary risk, which means if we, if Trump is just doing rhetoric with China. And by the way, if you remember back in February, I told you this was going to happen. As soon as we get close to the election, Trump is going to start another war with China, and he's going to show who's boss. And we're going to talk about Trump and China. Trump is doing this. Tariff boy is doing that, but no one's going to talk about Biden. It's a great plan. And so Trump will go to a peace summit or something like that, and maybe even do a deal or whatever, but no one will, like, people are going to say, Biden who? What? Oh, is he still running? Right? So Trump is great at, like, taking the media hostage. So we talked about this in February. So how far he escalates it, I don't know. But let's just say it doesn't become a problem. Doesn't mean you ignore it. Doesn't mean you stick your head in the ground, and right? You have to pay attention. And any minute an announcement can come out and change the market. So you got to be, hot to go, HOTTOGO. But you can still have the strategy of saying, if things are improving, this will go up. If things are improving, or even just staying the same, this will go up. If things are positive global macro, this will go down. If things are positive global macro, this will go up. If things are positive global macro, this will go up. And you go through all your currency pairs and you create logic. Remember, ideally, when I'm done teaching you how to properly trade as a trader, not just develop some basic technical and fundamental analysis skills, but if you trade properly, it'll be like someone opening up an Apple product and looking inside, the one that you can't open, the one if you have to physically break it open. You physically break open your Apple product and it's beautiful inside. When someone looks at your trading, sure, you're profitable. Yeah, great. All professional traders are supposed to be profitable. Doesn't tell me about risk-adjusted performance and all these other things and your alpha versus the beta. You have to do some other math. But if someone looked at your trading, it also looks beautiful. Above and beyond like the amount of money you make, they look at it and it makes sense. It's beautiful in of itself. If you trade like this, people say, oh, short dollar, long global macroeconomics, this makes sense. Okay? Now, we need this to happen first, and then maybe emerging markets will be saved. Now, the fact that there's a threat of another trade war with China, exotic currencies, just by way of macroeconomics, will suck. Will absolutely be horrific. Eddie, send me an email, wayne@fxbootcamp.com. Most likely with that problem, you used a different email address, or even more likely, you bought the courses, but you didn't set up your account. This happens to a lot of people. And I'm not sure why it happens, because I give you sort of like, congratulations, you have been successful. You paid this much and you got this course. And then there's this giant button, and then the words are underlined. It's like, click here to create your account credentials. And a lot of people just stop. And they're like, I paid for it, and they're done. They go away, open up their Dom Perignon, but they don't create the credentials, and then they come back to log in. Well, all you gave us, right, like you haven't created your account, so that's why there's nothing there. You log in and there's nothing there. And so now we have to go back and I have to provide you the link so you can do it again. Most likely that's what's happening. Either way, I'll get you fixed, okay? Wayne@fxbootcamp.com. Why the negative relationship good for the USD? I'm not sure if you're talking about this. What's supposed to be happening is if the dollar is weak, there's positive global macroeconomic growth. It is weak. The only thing is South Africa is being destroyed. Global markets for their exports are being shut down. And most likely, I mean, I haven't studied their sort of micro response. I haven't studied the South African central bank policy, But if you look at probably the fiscal side, the government is probably printing money and spending, and with no chance to ever make due on that. So most likely South Africa is trying to get out of their economic situation in ways that actually isn't good for the currency. And most likely 3-4 years from now, they'll have stifling inflation. And then they're going to have to jack up their interest rates to 1,000,000,000%, which will then attract money to South Africa and will ride that trend for years. So right now, they're suffering. And right now, what I'm saying is based on the economic analysis that I've just been giving you, based on things like the threat of a new trade war, every emerging market will be destroyed. Okay? It's like everyone in your neighborhood just lost their job. It's going to be bad. Kev says, our government stole 500 billion. Yeah, of course they did. But everyone in South Africa already knows that. Everyone in South Africa already expected that. I mean, like, so? But this is the consequence. Okay? This is the consequence. So right now, it's very, very, very bad. And you would look at, like, Turkey, for example. Do I even have it up? I don't even have it up here anymore. We can throw down... Well, so here's Eurozar. Just for fun, we can open a lira. Let's keep it even. I'll use the ZAR, or I mean the lira. Okay. And that doesn't look good, eh? Up is bad for lira. Okay. So we'll just do a monthly bullish or something. Okay. Now, keep in mind, I made 1,000% selling this. So you see how things can change? Do you guys remember that? I made 1,000 return on investment, 1,000% return on investment, but selling this. It might have been Euro Lira, but I mean, we could switch that, but it doesn't really matter. Okay. I made 1,000%. Every penny is gone now. Okay. If I had stayed in it, I should say it. If I had stayed in it, every single penny would be gone by now. Very interesting, huh? So I sold off in here and I think I held it all the way to just before this spike. Okay, I held it for 10 months. I made 0 pips, by the way. Was it 800? Oh, I'm sorry. Do you remember that? Oh, you can't trade this, and it's not Trader's Way, I believe. I believe it's the interbanking system. Okay. They pulled it right around here when the country's economics basically went to 0. Okay. I don't believe it's Trader's Way. It's the interbanking system. There's no one that is willing to provide liquidity. Okay, put it that way. There's no one that is sane enough to want to buy this. So you have to get rid of it. It's like it's worthless. You cannot buy lira. It's worthless. And expected to be worth even less. Okay? So, and I was trying to explain during the first crash here, this has to do with Turkey not exporting enough products and services. So it's like Turkey over the years turned into like a homeless man under the bridge. He's got lots of potential. He's got an education. He's strong, but it's deteriorated over time and got even worse. So don't you think it's a problem that a country doesn't export enough? Yeah, that's a problem because now you're not really making any money. At the same time, the government of Turkey and businesses, but mostly I think the government, was borrowing free money from Europe and free money from America from the 2008 financial crisis. So those loans came due, and they're like, oh, well, we owe you dollars or we owe you euros because the loans are denominated, but we don't have any money. They don't have the cash. Why don't they have the cash? Why don't they have dollars? Why don't they have euros? That's what a central bank does. The Central Bank of Turkey should have euros and dollars. It's not a problem. Oh, it's not. It's a problem if you don't have any exports. Because if you don't have any exports, then you don't have any foreign money. Right? Because they send the money to the central bank and convert them into the local currency. Now right? So anyway, so there's no foreign currency reserves. So now to pay the euro loans and the American loans back, they have to go into the interbanking system, sell all their lira to buy euro to pay back the euro loans, which weakens the lira. And they sell all their lira to buy dollar to pay back their dollar loans. But that whole process weakens it because now they've flooded the market with lira, and the lira is worth less than it used to be. The supply of lira went up. So now, 30 days or 60 days or 90 days later, more debt shows up, and they still don't have any foreign exchange currency reserves because they still don't export, right? So what do they do now to pay those new loans coming mature? They have to sell even more lira to buy euro to pay the euro loans. They have to sell even more lira to buy dollar to pay dollar. And they keep selling and weakening it more, which means they have to weaken it more, which means they weaken it more, which means they weaken it more. And it will weaken to the point of being worthless. And it's sad because I would love to see Turkey do very well. I have several Turkish friends over the years. They're wonderful, amazing, creative, intelligent people. And the culture is amazing. I would love to visit like Istanbul and Ankara and see the Roman ruins. And I want to sail around Turkey. I mean, seriously, like I'd love to. But right now they've destroyed their own currency and destroyed their own economy. And so, maybe it's the government, because I know it ain't the people. But I'm not political, so there you go. Of course, fortunate. It's not even a real currency anymore. Okay? It represents an economy that does nothing. So it's worth nothing. Now, I don't know if they still have debt coming. Okay? So let's say it in a positive way now. Turkey absolutely needs the dollar to weaken because they have no strength. So during periods where the dollar strengthens, like some profit taking before we go into September, October, November, December, right? Then they get crushed because it's a double whammy. They have to pay loans and the dollar got more expensive while their currency got more weak. And it's just horrible. It's a nightmare. Okay? It's an absolute total nightmare. But Turkey created it, so not my problem. Nothing I can do. Did they peg during that? I don't even know. I don't care anymore. There's nothing I can do except pray that my Turkish friends and their families are in a good position. Luckily, they're likely to filthy stinking rich compared to the average Turk. But even then. So peso a little better off because they do business with the United States. It's very good that they're right next to the largest economy in the world. So that's a better situation to be in. Okay? But you got to trade it right. You got to trade this right. This is sort of that weirdo kind of trade where this is profit taking off the R3, and this just might, we don't know, but you could, if you are an exotics trader, take it down to the bottom of the range. Of course, the opposite equal is it goes back up. So that's why we're in here, and it's in a tight range, and it's easily traded. Bears are going to sell this high. Bears are going to buy it low. And if you don't trade exotics, don't trade exotics. Don't trade it. But you might have a bias, predetermined bias. And if so, selling this 22.5 is pretty obvious. And selling it up here at 22.60 is also pretty obvious. So if you're a bear, this is pretty obvious. Pretty obvious doesn't mean for sure you're going to make money. No, but your entries are, elementary. If you're a bear, this is what you're going to do. And if it goes higher, you stop doing that. I mean, it's pretty simple. Doesn't mean it'll work. Doesn't mean you'll get your ops. But you've had some pretty good ops here if you're an exotics trader. Where are my exotics traders at? This is like the only thing you got going on, huh? Okay. Could you have traded an alternative to Turkish lira? What? Well, no. So Gordon, like the reason I traded euro Turkish lira there was two things. One, I wanted to teach you about exotics at a time where it looked like maybe exotics would come back. This is pre-COVID-19, right? So there was that. I wanted to open your eyes. There's a difference between asset appreciation and income. Okay, one is appreciation, one is income. The two forces of profitability as a Forex trader. And then I also wanted to show you that you can hold trades long term. So I tried to hold it for a year, but I got knocked out at break even. I made 0 pips, but 800% profit. So I think I did an all right job showing you that it can be done, right? But is there an alternative to that? No, that's a carry trade. I was just teaching carry trades. Can we check on, I don't have ruble, but it's all the same. Okay? It's all the same. Okay? Now remember, there's risks associated. Your spreads are high. Your volatility is high. So you have to have the right logic. Okay? So are there alternatives? Yeah, but right now there's probably something better for you to be doing. But that opportunity will come back. Okay? For sure. And probably pretty quickly. See, the way I look at it still is that underneath the COVID-19 macroeconomic contraction, in many places were healthy economies. Okay? So if, and we saw this back when the first, closures were reopened, boom, people spent money like instantly. So underlying this, there's still a healthy economy. Right? If it was bad before, now it's worse. Now, okay, that's a bigger, but there's still built-in pent-up demand, let's say. So there's still hope that this can come back. So as soon as there's like a vaccine, let's say, even if a company announces, we have done our trials, this is a vaccine, we will need 6 months before we can fully roll it out, but we have the cure, so to speak, then I think we'll go risk on emerging markets again. Okay? But don't turn your back on the fact like South African Rand, the value drops precipitously because of what the government's doing. That is, in the long run, an inherent risk. Okay? The reason interest rates are going to be high is like, A, no one in their right minds would lend South Africa or Turkey money. And B, their response to COVID-19 was to create massive, ridiculous, crazy inflation. So now they have to raise their interest rates to 10%. Okay, that's good for us as investors, but you are still loaning somebody money that is likely not to pay you back. That's why the interest rate's so high. So when you look at Greece was offering 20% interest rates and nobody was lending them money. Even at 20%. Why? Because Greece was almost for sure going to default on you. So like, hey man, give me 1,000%. It doesn't matter because you're not going to pay me back. You're certainly not going to pay me back 1,000%. You don't have any money. What do you mean 20% a year? You don't have any money. Where are you going to get the 20%? Where am I even going to get my principal back? Like, where does that money come from? They're like, people would laugh, 20%. Make it 1,000 and I'll still say no. And then the ECB says, oh, well, I'll do whatever it takes to protect the euro. Wink, wink, nudge, nudge, implied guarantee. And all of a sudden money just flowed like crazy to Greece. Why? Because they were going to get paid back. Okay? I don't think South Africa and Turkey is going to be able to say that, like, hey, we'll offer you 20% a year, but we might not pay you back. And they're like, well, give me a guarantee. And like, there's no guarantee. We might not pay you back, right? Like, all of a sudden you're like, there's a reason. There's always a reason. There's no free lunch. Okay? Real estate is like this. Do you understand that every time you buy something in real estate, you paid more than anyone else was willing to pay? Okay. Nick, every time I ask you anything about using your templates about for me, no answer. What do you need help with? You install them and you're done. So I would say like high yield investing, which you're essentially thinking of if you're like one day going to sell the euro, sell the dollar, South African rand. You're doing something that no one else was willing to do. That's how that works. Real estate's the same thing. Every time you're a buyer, there might have been another 50 buyers that were interested, but not at the price you paid. They're like, what an idiot. That person's an idiot. Whoever bought that building paid way too much. Well, they're using a different discount rate, right? But whatever. But whenever you're the buyer, you won the auction, so you paid more than anyone else was willing. By definition, you paid too much. And you're taking on very similar risks, and that's why the interest rate's so high, because someone was offering 9%, let's say they were offering 9%, no one was willing to invest, and then South Africa offers you 10%, so then you lend them the money. Well, you took the highest risk, no one was willing to pay it. Yeah, Wayne at fxbootcamp.com. So what happens, Nick, is you log in and there's an installer, an auto installer that installs it. Now, if you use a Mac, because a few people have been doing this, and I don't know why, because I blocked the ads for Mac users and stuff, but they're like, it doesn't work on Mac. I'm like, I don't know anything about Mac. I'm a currency trader. This is MetaTrader, right? They're MetaTrader tools. So whatever MetaTrader you're running, how you do it, I don't know. Do people run MetaTrader on Mac? Yeah. How do they do it? I don't know. But if you have a MetaTrader platform, you can install the files. Now, if you're saying the auto installer doesn't work because a Mac can't run an exe file, okay, well, again, I don't know anything about that. So why don't you just download all the files and manually install them? They use Windows. Yeah, but see, again, I'm offering my chart templates. You use a Mac, you use Linux, not my problem. I don't know. Open your MT4 and install the files. Right? So I don't know. But email me, man. Email me. I'll do what I can to get you taken care of. Okay? There's also lots of people here that could probably help you. Right? Yeah. 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 So then just install them manually. Yeah. Yeah. Just drag the files. Right? It's so easy. You go File, Open Data Folder. Now it opened my window down here. Hang on. Where did it go? Here. Okay, so there's my data folder. Profile templates go in the profiles. Indicator files go in the indicator folder. MQ4, you have to open up and put your other stuff in here, I think. There's some sort of order. There's a whole video process. MT5 is a little different, but I'm sure you can look it up. Use YouTube, use the internet. Okay. So I offer my chart templates for $5. I can't provide customer service, right? I just Google it. Yeah, but yeah, so if everything works but that, then stop using it. You might have an account that it doesn't work for, or use a different broker that doesn't provide the right feed, but if it doesn't work, stop using it. It works for many, almost every. All right, So let's get off exotics. One thing I did want to do Forex.Today. Stupid Windows. Every time. All right, calendar. Thank you, Traders Way. Thank you, Traders Way. Thank you, Traders Way. Traders Way. All right. Aight, what's going on? What's going on? Nothing's fair, I'm torn. Wow, not much going on this week. Kiwi, right? You got your Kiwi on tomorrow night, so which is Wednesday their time, I believe. Wednesday CPI. Okay, yeah, that's interesting. We're more interested in PCE than CPI, but CPI is good. They put it on the news. All the talking heads will talk about it. The funny thing is the Fed doesn't use CPI. Just the people on the news channels use CPI. Why did South Africa cut their interest rates? They're trying to spur their domestic economy and get people to stop saving and start spending. So what happens when interest rates are low? There's no reason to keep money in your bank account, so you might as well spend it while you can. That's why they do that. So that would not, and you won't be able to afford, because your currency is weakening, you won't be able to afford foreign goods and foreign services, so you end up buying domestic services. Okay? So a price of a gourd is going to be cheap, but the price of Nike shoes are going to be expensive, right? So you'll start buying things domestically because there's no incentive for you to save. Okay? Cool. All right, and then Aussie unemployment. Okay, that's good. So Aussie jobs. Kiwi. So Aussie and Kiwi this week are going to be the real focus. Yeah, I wouldn't make. I mean, obviously, U.S. CPI is important, but not for fundamentals. It's news. It'll move. There'll be some volatility, but it's really not fundamental. It's just news. So just looking at sort of the middle tier stuff, PPI, great. Zoo, great. What else? British GDP, I guess. I mean, I don't know. Who cares whether it's right? Whether it's negative 1.8 or negative 1.5, who cares, right? So Michael says, didn't South Africa just put another alcohol ban, though? And look, nobody cares. The point is right now, if you look at the value of the South African rand globally, nobody in the world cares. That's the problem. South Africa is now an island floating out in the ocean, managing its own economy. Nobody wants to trade. No one wants to buy. No one wants to invest. So now the entire good people of South Africa are floating around this island. It's like it broke off the tip of Africa and it's now floating out to sea. No one's coming to save you. Nobody wants to help. Nobody cares. So now you're stuck with a weak currency and whatever you have inside your borders to feed yourself. That's it. So whether you have an alcohol ban or not, nobody cares. Will it affect the South African rand? No. That's a domestic issue. That's all micro. You have to deal with the fact that nobody's working and no money is being put to work, and you have to worry about rampant unemployment and rampant inflation. Okay? And there's probably some socialist ideologies that need to be updated too. So I don't know if this is South Africa's wake up call, but you got to fix this, guys. You got to fix this. Okay. It's hard to export stuff to the rest of the world when no one's working, but no one gets a job if the rest of the world isn't buying stuff. And right now, people aren't buying stuff. And that's the problem for South Africa. But it seems like the currency is devalued much faster than that being the only story. So now if you're printing money when there's no basis of the money, that's when you get your hyperinflation, low economic activity, and massive printing of money. It might work for the United States because they're a reserve currency, but it doesn't work for an emerging market, right? So that's what you have to think about. Like the alcohol ban, who cares? You got like significant problems, 1,000 million times more important than that. Okay? Sorry, that's sobering, isn't it? It's sobering, but, right? It's sobering. Well, you're not doomed because you know how to trade Forex. You want to save your family and your loved ones? Get really good at trading Forex through patience and discipline, low risk, and moderate, consistent, low leverage returns. And you'll earn income. And the cool thing is you can earn dollars that buy a heck of a lot more rand than they used to. So you can take care of your loved ones outside of your borders. So everyone else in South Africa is on this little island floating out at sea, farther and farther from other people's minds, the rest of the world's minds, right? But you can trade with someone in Shanghai. You can trade with someone in London. You can trade against someone in New York City, the biggest bankers in the world. You have access to that trading volume, and you can take care of everyone around you, and no one even needs to know you're in South Africa. In fact, if the currency is getting cheap and the domestic products are getting cheap and you're making tons of money in Forex, your actual standard of living might go up because there's some rich biatch in some awesome neighborhood that is going to run out of cash and have to sell their house for cheap. Maybe it goes to auction. I don't know if that happens there. Meanwhile, you're making a killing in foreign exchange. So now every US dollar buys twice as much or 3 times as much ZAR. So now you can go over and buy that house at a discount and live in a good neighborhood in a big, beautiful house. And they're saying, the economy is crashing, the economy is crashing. And you say, yes, isn't it wonderful? It's wonderful if you can get off the island. And of course, if you want to help your brothers and sisters in South Africa, make money. You want to help? Make money. There's no dignity in poverty anymore. Make money and help. Take care of yourself first. It's like if the airplane runs out of oxygen, put the mask on you first, and then take the mask and help the elderly or the children. Take care of yourself first so that you can help others. We should, right? I mean, in times like this, especially if you're in a place like South Africa or Turkey right now where exports are zero and the currency is being debased like crazy, massive inflation's coming down the pipeline, utilize the fact that you can reach across the world and make money. Cool. That's done. Euro GDP, who cares? Okay, well, none of these things matter relative to the real news. The real news is, like, on superseding all of this, will China and the United States shut down the borders again? Superseding all of this, will we get hit by COVID-19 shutdowns again? Oh, well, what about the per unit labor costs, eh? What about European GDP, eh? Dude, did you see the German harmonized index of consumer prices? Right? We need to focus on fundamentals, not data sets, not data points. You're not an algo. You got to look at this and say what's important right now. You got it? What software did you buy? See a Rolu? Kwame B, what software? Good job, Ronnie. Jim got him first. Jim did the timeout. All right. Nothing's right on torn. So that's that. So here we are, the second week of August. And I'm expecting the market to be quiet. So I'm trying to be quiet with my trading. Yeah, so guys, don't misinterpret what I said about South Africa. If you're South African, this is not only a huge opportunity, but it's almost like a moral imperative now. Right? It's a moral imperative now. Like, it's time. You got to step up and not degenerate gambling. But it's a time to step up because it's needed and maybe even required. So it's time, right? Some natty? Yeah, we can do some natty. So I guess like to the South African brothers and sisters, it's not like there's hope. No, you have opportunity. It's not even hope. It's opportunity. It's like hope isn't real. There are actions you can take right now with the tools you have to take care of yourself and your loved ones and then your neighbors. If that's right, you have right in front of you. Right in front of you, you can access the global markets. You're not on an island floating out at sea. Okay? So thank goodness. Okay. This was to the person a week ago that wanted to sell here, and I'm like, well, I see that it's resistance. I see it's plausible if you're a bear, but let's break this down intellectually into a way to know when the timing is right, because the timing is not right. And I said, if you were going to sell here because it's resistance, you're betting it's resistance. Therefore, by definition, you're a degenerate gambler. So then I broke down how to use like a stochastic oscillator to confirm the kickoff of the resistance. And of course, we never got it. So what do we do now? Same sort of situation. If you were a bear, this was an obvious sell price. Okay. So is it going to fall? Well, I don't know that, but if it does continue, your target's down there. Right now, we're on the 21, which means you're bullish and aggressive. So I think to play this a little more conservatively, if you breach the 21, you could sell a lower high or double top. And try. The next challenge is going to be right here. What used to be resistance is now support, which is bulls defending 2.0. And if you can, of course, breach that, then you're on your way down. Okay? So here's my thought. This is not bearish yet. So you're trying to set up a bearish trade in a short-term bullish market. I know long-term it's bearish, but in the short run, this is still bullish. So even dreaming about selling it is a little bit delusional. Not that it won't work, it's just a little, right? Hey, Marina. So, all right. So patience and discipline on this. Okay. Patience and discipline on this. Okay. Patience and discipline on this. So yeah. Yeah. Just look. There's probably. I'd say there has to be a better opportunity than that. Now, if you were gonna be a buyer, see, like, let's do it that way. Like, if you were a buyer, because the other person was a bear, and I'm like, well, if you're a buyer, this is out of position, so let's do it that way. If you're a buyer, you're riding the 21, you're OOP, which means you're going to kick off the 4-hour 21. You're going to hit your target early, and you're going to take profit and prepare for a possible counter trend trade based on profit taking. Yeah, Marina's in Cape Town. Salato Club says, I think it's a wake-up call to buy businesses in South Africa. That's sort of my... so I guess here's what I'm saying, and I don't need to go into why, but let's just say I can find better businesses to buy globally than South Africa. And again, that's based on government policies. I'd rather buy a Dutch company. It's just the government policies make South African businesses more complicated than other government policies towards business. Why is the third week of August not going to move the ends? Well, first of all, I don't know what's going to happen in the third week of August. But, okay, but it has to do with my analysis of the political cycle. Am I going to explain the monthly subscription? I'd rather not, but how's it going to work? You pay monthly, you pay money every month. Facetious answer, but like, I don't know how to respond to that. You use a credit card? But anyways, I don't want to pollute our session. I don't want to make it a sales pitch. Let's talk about Bitcoin. Bitty, can't you see? So kicked off, pachow, kicked off. Look at that. Pachow. Okay. This, I believe, is NFP. Let me just double confirm. Daily, yep. So this was NFP. We said that on Friday that this would be the buy zone. So you'd have a chance to either front run off of the roll reversal. And then I drew the fib. I'm like, there's multiple ways you can do this. Not that, right? So anyways. And then, or here's the buy zone for Monday, which snapped and bounced on London Open. I guess I should answer the question better. I'm sorry, I'm pissy. I'm tired. I'm telling you. I've just been sleeping all weekend. I'm just catching up from school. I don't know. I must be bitchy. So let me try it again. How does the monthly subscription work at FX Bootcamp? Well, when you join FX Bootcamp, there's somewhere between 35 and 50 hours of video training courses. You can take them on demand whenever you want. You can binge watch them like you binge watch Netflix, or you can go back and refine your skills, but they're there. You also get an opportunity to join a live trading group, and that's the monthly subscription. Right now it's only $99 because it's on super sale. And that gives you access to a live group that meets on Thursdays, and we plan trades for the following week. So we don't plan trades for Thursdays. We don't plan trades for Fridays. We plan trades generally that we are taking Monday. So we plan a week in advance. We talk a lot about fundamentals. Sometimes we'll spend the whole day talking fundamentals, which is usually sometimes a couple hours. But sometimes these meetings go on for 3 hours. Okay? So we'll do fundamentals. Sometimes it's me talking. Sometimes it's another student that has done their research. Very often we get together in groups. And what I mean is, 50 people log in, let's say. And I create a bunch of groups of, let's say, 8 traders per group. And I organize them in different fashions. Sometimes it's based on their bullishness or bearishness on global macroeconomics. Sometimes it's their love or hate for a particular currency, that kind of stuff. And I put them into groups. And then as a group, they go through their charts together, sharing their screens and having conversations about which yen pair will go up more next week. Will it be the CAD? Will it be the pound? Will it be the euro? Will it be the Aussie? Will it be the Kiwi? Why? And they share their charts. They share their trade plans just with their little group. And then they come up with the best trading plan for the group, which obviously requires a lot of conversation. Once they come up with their best trading plan as a group, having shared all their analysis together, this usually is about a 45-minute process, then we come together as one large group again, and leaders of those groups come back and give presentations to everyone of why they thought the Kiwi yen next week will be the best yen pair, and take us through the trade plan, both entry and exit. Drop the mic. Okay, I want to go back to oil because it's another canary in the coal mine. It's another sort of leading indicator, if you will. And we've been moving sideways for almost a month, and the range was narrowing and narrowing and narrowing and narrowing, and we just might be waking up. And this moving upward, first of all, gets us away from the mean and gets us closer to a standard deviation, which would be, first of all, ideal to continue the range, but also gets us closer to 50. And based on global macroeconomics, I'd rather this go up than down. And then what this chart is telling us, then it would likely actually come down again and then maybe try to the next level and get us to 60. So what you need to do, we're sitting around $40 a barrel, right? So what you need to do is analyze all the data around the world, and whether you believe global macroeconomics is going up or is improving, or if you fear risk, right? Are you looking for big reward by the end of the year, or you fear the risk? Both are correct, by the way. The difference is timing. So you would have to make a decision. Are we on our way to $60 a barrel? Okay? Or are we on our way to $10 a barrel? That's what this two standard deviations. Okay? And this is one standard deviation. That's two standard deviations. So are we on our way to 60 or 10? Or if you want to make this a little better, I mean, that's what the numbers say. But you might say, well, why not, if we're at 40, why not 20? Okay. So the difference is we're already moving, Oscar Mike, right? So two standard deviations below the mean versus two standard deviations above the mean. So to make it more fair, then you can say, well, why not 10 versus 55? Okay, whatever, dude. Up or down? Okay, that's the decision you need to make here. Doesn't mean you trade it, but you're looking for evidence, because if this is on your way to 60, then you're telling me positive global macro, which has me long all commodity currencies, and long all yen-based currencies, and maybe buy Swiss franc. I would sell the US dollar. This one piece of knowledge could put me into a bunch of trades, right? So euro dollar, pound dollar, okay, Aussie dollar, Kiwi dollar, dollar CAD. Okay, I won't even be able to fit it onto the chart. Okay. But then all of these versus yen, right? And WTI, Bitcoin, gold. Okay, there's a lot of things. And then all of this against yen, and then all against Swissy. So 1, 2, 3, 4, 5, 15. Yeah, so I'd say at least 20 trades this one piece of information will give me. 20 trades per day. Which means from there, it's not that every day I'm trading 20, but I'm looking at all 20, and based on what's happening with congruency or relative strength, that's why you now use relative strength, because one day you have to say, well, I know I want to buy dollar and Kiwi and CAD, but which one do I buy today? And you're like, wow, okay, CAD is much stronger today. So I buy CAD yen, I sell USD CAD, and you look at CAD Swissy, okay, that kind of thing. Because CAD today, based on whatever data point, because of news, this week CAD news is important. Okay, great. So this week CAD is good, so, but it doesn't change your strategy. You're just saying today, the target is CAD. Next week, the target's Kiwi. The target after that, the week after that, maybe some Aussie. Okay? But you know your battle strategy. Okay? You're not making it up. None of this is random. I don't believe in the random walk around down Wall Street. If you've ever read that book, I totally disagree. I think it seems random if you don't know what you're doing. Yes, I know the guy has a Nobel Prize, but I think I've lost respect for the Nobel Prize anyway, so it doesn't matter. Whatever. I don't believe any of this is random. I look at this as Newtonian physics. Okay. Guy says, most unlikely, but it might be $30 before 50. All right, so what you're probably suggesting here is, before 50? Well, see, I don't see that on this chart. This is weekly. But you're saying down to here. See, that doesn't live inside these moving averages per se. It doesn't fit in the weekly pivots per se either. So that would be an opinion, Guy, which is, I'm not saying wrong, but it's hard to confirm that yet. Right now, we seem to be riding even the 5 EMA, right? Like if I can't zoom in, so I have to go to a smaller time frame. We're kicking off of a buy zone. So I see this continuing until 50. So I think I'd say the same thing but differently. I'd say 50 then 30. Right? No, Blue Boy, I mean, it's not arrogance per se. I mean, a bit of it is. But, you know, when I hear people talk about stuff like, you can't trade on Sundays, you can't trade in the Asia session, you can't trade in the summer, you can't trade during winter holidays. I'm like, it's true, you can't. But I can. And I'm not a genius. So you can't, I get that. But let's not write a book on what you can't do. Let's focus on what you can do. Okay? And so I don't believe Forex, not even a little bit, is random. I don't even think a little bit. Okay? I think everything is orchestrated. These are tools. Right? This is a tool. It's also a consequence. That these are not random. No, I know. I'm just sort of restating, right? I don't think anything is random. Right? Therefore, you don't need a crystal ball, but some knowledge. Right? And that's why I like the Harvard Veritas idea. Right? You are enlightened with the truth, not with magic, not with a crystal ball, not with a tool that you can install in your MetaTrader and it makes you rich. It works night and day for you, so you don't have to work. Bullshit. But you need to work hard 24 hours a day. You need to do the job, but I don't think there's magic. I don't think there's a secret. There's just simply the knowledge. There is a knowledge. And that knowledge is truth. And once you know, if you have a half a brain and a ridiculous work ethic, you can do this. Can you be profitable only technical? Yeah, but it's the hardest way of doing it. I think you could make more money more easily with fundamentals, but I would never say, how about this? I love technical analysis. I love it. I absolutely love it. I love scalping. I love spot trading. I love intraday trading. I like trading the news. I like day trading. I like swing trading. I like carry trading. I think all of these skills are absolutely, totally important. I don't think it makes you a complete trader, but it's usually the place where people start, and you do have to have skills there. Okay? You do have to have skills there. But once again, and I said this in NFP at FX Street, I said the most famous currency trader in the world is George Soros. And he's made $1 billion in a day, but he made $1 billion in the next day too. But he already had billions of dollars. So how does he make all this money? Not on charts. He doesn't know anything about technical analysis. He'd probably laugh at you if you talked about a MACD. So my idea is there is truth in both. I think you could be a pure technician. I think you can be a pure fundamental trader. But I think the best trader would be a combination of both. Okay? I think if you're going to be sort of the healthy knowledge would benefit you. How you use it is up to you, of course. You will find your own style. But I think having a healthy knowledge of both is most important. But if you're a soldier and you don't know how to kick down a door and fire your rifle, you're not going to be a very good soldier. If you're a general and you haven't studied the last 5,000 years of warfare, then you're not a very good general. Okay? So you have to think grunt and general at the same time. And I think that would be most ideal for you. Maybe when you get like $100 million to trade with, maybe you'll change your style and be fully fundamental, right? Like maybe that's why George Soros is fully fundamental, is because he has to deploy $100 million and it takes him 5 years to get into a dollar trade. It takes you 1 second to get into your dollar trade, right? So maybe you start pure technical, but as you find success, I think you will welcome more and more fundamental, because in my opinion, it helps me think about what I'm going to do next month and next year, or that this year, the fourth quarter will be different from last year and different from next year. Why? Well, that's the fundamental analysis of a political cycle. You're like, oh, whoa, dude. Yeah, okay, you don't have to have that in day one. But as you find success, I would like for you to fold a little more fundamental with it, a little more. And then, of course, if you go out raising money from other investors, they don't know anything about technical analysis, but they know a lot about the economy because they're wealthy, right? So they have real estate, they have gold, they own a business. They know these things. They're probably a little more educated, and they have a little bit more of a globally minded view of things. And so when they sit down, they'll want to talk fundamentals. And you'll say, well, you know, my MACD, and they're like, what's a MACD? Right? So you're going to have sort of the language of the trader, but also the language of the investor. And that's kind of how I look at it. One is very much income based, right? And the other one is very asset appreciation based. And really you can combine the two is all I'm saying. So how you trade in year 1, year 2, year 3 is likely different in how you'll trade year 7, year 8, year 9. And then once you get there, I think you will find your enlightenment. And that will be how you combine the two different skills together to create your own bias in your own trading style. That will be in your enlightenment, where you can take care of your clients and your family, and everybody's happy. And you like and enjoy what you do. That will be your enlightenment. And in my book, I say the enlightenment is you win the war, and that is your love and passion for Forex that also provides success and money. And that gratification is the war won. Okay. Is sentiment the same as looking for risk on, risk off? No, but it'd be more like do people in the sentiment analysis think it's risk on or risk off? Okay. See, that's where I get like, I don't care about sentiment. I don't care about consumer confidence, right? I don't care about sentiment. That's where I'd say, give me the charts. I see everything on the charts. Okay? So sentiment, I don't care. Give me the chart. I'll confirm the sentiment by whether they're putting money in the market or taking money out of the market. Okay? That's where I think technical analysis absolutely rules. And technical analysis will confirm it, right? Is this bullish or bearish? Well, right now it's bullish. Okay? It's made a higher high off of a bounce off support. So I'm hoping, okay, we go to 50. And if it drops back here, I can see they wimped out and I need to tighten my enthusiasm, temper my enthusiasm, okay? That's all I need to make that decision. But fundamentally, I made my decision long ago, back when oil was free, that maybe that was too cheap. Okay? So that's how you get that. The fundamental question is pretty easy. Is the world going to be better off at the end of the year than it is now, or worse off? That's it. I'm done my fundamental analysis. Now, I don't actually make those decisions. The central banks tell me. There is one thing that Jerome Powell said about 7 weeks ago, maybe 8 weeks ago now. He said one thing, and he said, "Psst, hey Wayne, short the US dollar." And I told everybody, because of that statement, I'm looking to short the US dollar for the next 5 years, maybe longer. I didn't make the decision. I was told. Now, I also understand what will attack that bias, where the bias can go wrong, like a trade war, like the economy shutting down because of COVID, and they're kind of the same thing. If something gets in the way, acts as an impediment to global macroeconomic expansion, that I have to pay attention. Barring those two exogenous shocks, which are, one is man-made, one is nature-made. But if we can somehow tiptoe through the minefield and avoid all of that, boom! I'm a straight-up macro bull. And it'll last for a very, very, very long time. RBA has told me be a bull on the Aussie. Thank you, RBA. The Fed has told me to be a bear on the US dollar. Thank you, Fed. And so now we'll go full circle and we'll end with this. At the very beginning, I said, yeah, Aussie dollar is probably going to be my canary in the coal mine for global macroeconomic expansion. As long as this is going up, I'm going to be very confident in being a bull on everything that needs to be bullish. And someone's like, well, how do you know that? And I just explained it once again. The RBA told me to buy the Aussie. The Fed told me to sell the US dollar. So as far as I'm concerned, this will go up for 5, maybe 10 years. And we talked about it down here. I told you, and I told you again, and I told you again, and I told you again, told you again. And I'm still there, guys. So I'm sure you're crushing it. You're just making an absolute fortune on this. Because of fundamental analysis alone, what does the technical analysis tell you? Well, you're a bull. So what do bulls do? Buy dips in an uptrend. So the second thing is this an uptrend? Now you're confirming everything with technical analysis. This has nothing to do with fundamentals anymore. You already made your decision. Your strategy is set. Is this an uptrend? Well, if you measure it with standard deviation, you can say the rise over the run creates the slope. Therefore, yeah, the slope is up. doing statistical analysis, yeah, right? Rise over run. This is bullish. Cool. So now what do bulls do in an uptrend? They buy dips. You can use any technique you want. Any technique you want because you're buying in an uptrend. Do you understand? As long as you buy dips in an uptrend, you can use any technique you want. Absolute anything. The trend is your friend. So yeah, you can buy M2s, you can buy M2s, you can buy M2s, you can buy M2s, you can buy M2s. And then no M2, you can buy an M2, you can buy an M2, you can buy an M2, no M2, you can buy an M2, you can buy an M2. And buy an M2, you can buy an M2. Yeah, you can do that. Or fib, up, down, buy, 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 up. And I swear to you, the RBA told you. And we've been talking about it here and 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 here. So after that, once your fundamental decision's done, use your technical analysis skills. Anything you want. My way is not the only way. All you need to do is buy a dip. You can use Fibonacci, you can use Elliott Wave, you can use oscillators. All you have to do is buy dips in an uptrend. Okay? Okay? Any way you want, you got it. Okay? Yeah. Yeah, 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 yeah. Anything you want, you got it. Do, 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 do. So I know you can do this. This is my message to you. This is not a buy. This could be. Not a buy, 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 not a... maybe that's a buy. I'll throw that down anyways. Maybe it's a buy. Whatever. You can do this. You got this. You got these skills. Okay? You got these skills. Okay? You got this. You can do this. This was made for you. Okay? This is your way out. This is your way in. Okay? So maybe when COVID goes away, maybe I come to Cape Town, we party on the beach and do Forex. Maybe when COVID goes away, you come and hang out with me at the Harvard Club in New York City, and we'll get limousines and we'll drive down to Wall Street, and we'll go through Central Park, and we'll have fun. Okay? Yeah, Sean, you're so much better, bro. You got me. So, anyways, I know you got this. This is your way in. This is your way out. There's lots of fun things that we're going to do. This is, once again, this is the first day of the next 5 years of my life. And I'm very honored and pleased to have you on this journey with me. I'm very excited about the future. I'm very excited about you in my future. I'm putting down some very big, very awesome, amazing plans for you. So, I don't know. There's no Dom left in the bottle, but I'll toast you. You know, cheers to us. I'll see you tomorrow.